So you're telling me that wholesale level inflation data, PPI this morning, comes in scorching hot. I get it, one reading doesn't make a trend, but comes in scorching hot, and the Trump administration still wants massive interest rate cuts. Doesn't make sense to me. To me, the only reason why you're cutting interest rates is if you think the economy is bad. If the economy is as good as the administration says it is, and I'm a Trump fan, then you don't need to cut the rates. But the economy really is weak. I think that Trump is trying to get interest rate cuts and get it for all these other reasons, at least on television, without trying to say the economy is not good. Literally right now, 29% of S&P 500 companies are in a bear market. 33% of NASDAQ 100 companies are in a bear market. 57% of the Russell 2000 small cap companies are in a bear market. Now, the Russell 2000 represents America. Most companies are small businesses. 57% of them already in bear markets. This is bad. So I think, tell me what you think in the comments. I think Trump wants to cut the rates because he knows the economy isn't good and he's trying to thwart some of that future, and I don't have a timeline, but future sell-off of even more of the stock market. What do you think? The S&P 500 fractionally lower as of about 2:30 this afternoon, but still absolutely above that confirmed breakout point, in my opinion, above 6,368. What did do very well today was the Magnificent Seven stocks. And how many times have I shared with you, you want to be invested where the revenues and the sales and the net profits continue to increase, and more or less the Mag 7 is where it's at. I'm not a huge fan of Apple, I'm not a huge fan of Tesla, but otherwise I pretty much love the Mag 7. I want to be where the strength is, and that's where the strength is. Crude oil was up today, at least as of about 2:27 this afternoon. I am still happily short crude oil, and most likely will not start to unwind any of my short positions until we can get at least an unconfirmed breakout above $64.42 a barrel. Gold down a little bit here on the day as of about 2:30, but I love it, but pretty much still hanging around that area at about $3,400 an ounce. Believe me, yeah, I'm long gold, but I would love to buy more if we could actually come down to about $3,320 an ounce. I personally don't think it comes down that far, but if we can get anything lower here in gold prices, yeah, I could buy some more. What do you think? Natural gas up a little as of about 2:22 in the afternoon. I am long natural gas, and yeah, my position is underwater. Let's see here if we cannot confirm below $2.84 a cubic foot. Natural gas, not in a straight line, but could start to finally head higher. If it does confirm below, whoa, natural gas could go as low as about $2.39 a cubic foot. I continue to watch both of these levels. I have a tiny bit of cash still on the sideline allotted towards possibly buying a little bit more natural gas. Stay tuned. The 10-year yield and the 20-year yield, for that matter, obviously up today with inflation popping like that, like it did on the PPI. Yeah, you would expect these higher levels. So you know me. I think about 2 days ago, I did get out of my short bond fund position. Happy to do it. Got out at a fractional gain. So if I get back in that trade, there's no wash sale issues. So I get it. Higher yields today would have been nice to be short those bond funds. I still say that the 10-year yield and the 20-year yield could come down from here now. I know. Just a couple days ago, I was saying I think yields can go higher. It's different now. I think as of yesterday or the day before I started sharing, I think yields could come down. Maybe I'm wrong. I don't have a crystal ball, but I am out of any sort of long or short bond fund trade at this time. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC.